Welcome to Loans Elevated, the podcast that brings you the latest industry news, expert interviews, and insightful discussions that will help you stay ahead in this dynamic market. I'm your host, Broch Lassig, and I've spent years in the trenches of the mortgage industry, helping individuals and businesses navigate the complex landscape of real estate financing.
I'm your co-host, Heidenreich, and together we'll cover a wide range of topics, from business strategies that skyrocket your success to mindset and motivation that fuel your growth. So once we have the application in during the consultation, which, like you said, we get done in 30 to 45 minutes max, we're going to be going over a pre-approval summary. This is the form that we send to you, because we don't actually send you a pre-approval letter, which we'll dive into why we don't do that next. But we fill out this pre-approval summary. This is all the information you need while you're out shopping. First thing on that is, of course, if there's multiple people on the loan, who is going to be the main contact? Because sometimes it's not always the main borrower. Sometimes it's the co-borrower on the loan, and the easiest way to contact them. That way we know for everyone on the team, but also your real estate agent, because we're going to send this to your real estate agent as well. Then we're going to go over your real estate goals, not only for this transaction, but maybe a long-term approach as well. That way we know the way we set up this mortgage, is it going to have a domino effect on other mortgages we set up? Is this going to be a long-term move? Is this more of a stepping stone? So on and so forth. After that, we're going to dive into what the most important thing for you is in this transaction. Because yes, there's multiple factors that are important, and this is a matter of, this could be timing, this could be a monthly payment, this could be
a specific property need.
Specifics. Yeah. So really what we say is, okay, what is the most important thing to you in this transaction? And you have to hit this for the transaction to be a success. And then we're going to reverse engineer based off that.
And the beauty of understanding these questions is they seem super basic, but when we ask these questions in consideration of the specific transaction, the specific scenario, your personal details, where your emotions are and how your decision-making is going, we mine out information to help streamline this process, to help ensure you get the house. And it essentially eliminates so much unnecessary stress because we're being proactive and getting a legitimate understanding on what the goals are. But then, like TJ said, this can that little top part, a few questions, can significantly impact how we recommend which direction to go, because it's like, this goes into our holistic mortgage planning, which is essentially what the pre-approval summary is based around.
Right.
It's our consultation. But when we hear certain things, we can provide different insights on, like, hey, I know that you're selling your current home and you intend to put all the money down. However, based on what you said your goals were, like, I had a client, in fact, there's an ebook that's coming out on holistic mortgage planning soon, so stay tuned for that. But I had a client, she's like, I'm going to keep my current house and rent it, and I want to buy a new house after that, but I have limited cash out of pocket, and so I'm going to rent this thing out. It should break even on the mortgage. I want to put like 5% down on a new property, but I'm concerned about payments because rates are higher and house prices are high. We go through this initial part of the pre-approval summary questions, and I mine out a little bit of information. Information number one is her property is a single-family home that, because of the area and the nuanced details of her property, it's only renting for about the same price as a townhome could rent for. But she has $400,000 in equity tied up in this house that she's going to convert into a rental. And in her mind, she just thought that was the best thing to do. But then what I also discovered was one of her main financial goals, which we get into this stuff through the conversation. One of her main financial goals was to get a college fund for her daughter set up, and then also buy a new property. So she wanted rental income for retirement, wanted her daughter to go to college, and she wanted to start that fund, and she wanted to buy a new primary home that was more suitable for their family. Well, I was able to kind of flip the whole idea on its head and say, well, let's just think about selling that property that you're moving out of instead of renting it out. Even though it's got a super low rate, and I know it kind of psychologically makes sense, we flipped it and said you can now sell it, buy a new primary home, fund your daughter's college education. I think it was like $75,000 she could put in a college education fund right now, give it a few years to compound and fund her the education, and have enough money to buy 2 rental properties on top of that. But the nice thing was those rental properties were going to be purchased in light of being specific rental properties. She was going to go buy the properties in the right area,
the
right property type, the intent to cash flow, so on and so forth. So we literally accomplished the goals she had coming in, plus the goals she didn't even realize had anything to do with buying or selling real estate, and she was so happy. So I think I wanted to just highlight the significance of what that consultation is like.
It's true. Another example of that, I had a consultation just this week where the property they wanted to house hack, right? They're purchasing a property with the sole intent to turn this into investment property in just a year. Well, right now, oftentimes I'm not advising clients to buy down permanent points, just because the odds of the people refinancing the next
like
12
discount
to 18
fees
months
to get a lower rate permanently.
Very likely they're going to refinance. But in this circumstance, knowing that odds are they're going to turn this into investment property, I advise them, if they've got seller concessions, to maybe utilize that towards a permanent buy down. Because if they were to refinance this later on, they'd have to refinance it as an investment property, which is not going to be primary terms, which is going to be a half a point to a full point higher than what terms are on a primary residence.
So it could totally eliminate the possibility of refinancing.
Exactly.
And had you not asked these basic questions and gained an understanding of what their objectives and goals were, which virtually no lenders do, by the way, we call it McDonald's mortgage. Well, I want to do this, and I got seller concessions, I want to do this, and the client just basically tells you what to do, and they push the paper around to make it happen. We take a more serious approach to it for this specific reason, because if you don't,
it could cost them thousands.
100%.
Yeah.
Tens of thousands. If they couldn't refi and save money in the future, it could cost so much money.
Yeah.
So, yeah, it's good.
Yep. So then after that, we're going to go over their preferred numbers, like where they want to be. Usually this aligns with their monthly payment goals. And we'll add that into the pre-approval summary. And then below that, we've got a formula. If they want to increase that or decrease it, their purchase price, what their monthly payment will be based on that purchase price.
That way you're empowered as you're out shopping. Your realtor's empowered as you're out shopping on the fly. It's like, well, we ran numbers on a $500,000 house, but this one's $525,000. So how's that going to impact our payment? Everyone's going to ask that question. We give you the tools to just understand that quickly so you can make decisions quickly and not be at the mercy of us getting you the information when you need it, which is nice. So we just try to empower on that. But
I don't have it in front of me, so I'm just going off memory. But I think next is loan program, correct?
So we have purchase price, monthly payment, cash investment. So that's the expectations that you just talked about. And then we have mortgage metrics. So the mortgage metrics are like, what is the occupancy? In other words, is this going to be a primary home, an investment property, second home? That's important to mine out because sometimes it goes undiscussed, and then you go under contract and you're like, wait a minute, no, I'm not. This is actually going to be a second home. That totally changes the entire plan. So we make sure that information is dialed in. Loan program, like TJ said, current debt to income ratios so that you and the realtor understand where the limitations are. And then we dial in a max approval amount so that you know how much you can flex. But then down below, we have additional total cash available and additional notes. So we basically culminate all this data and we'll give a quick summary of additional notes. Like if you did X, Y, or Z, we could increase the budget to here. But for now, we structured it this way. And, if needed, you could pull money from your retirement account to help fund if you wanted to flex into the property with an ADU. Or if you buy a property with an ADU, we can throw in the rental income and qualify you for this much more.
Yeah.
So we give just a lot of...
just additional data that there's no really boxes that would serve for that purpose. Exactly. And the bottom section, I think, is the most important if you're a real estate agent, just because it helps you write the offer based on what we've discussed with the clients. First section is seller concessions, what we've discussed with the clients. Often, I'd say 80% of our transactions right now have some sort of seller concessions.
Or seller paid closing costs, in other words.
Yep. So we'll disclose what we talked about with the client, whether it was a 2-1 buy down, a 3-2-1 buy down, any sort of temporary rate buy down, permanent rate buy downs, or if it was maybe just using concessions towards lowering their cash to close, kind of like our game plan and what we discussed with the clients there.
And to TJ's point, sometimes that person buying an investment property, we want as much as we can get in permanent buy down points so that we can get that rate down because we know it's going to be an investment property forever. So hopefully they only have to do one loan. Yeah. We're saving them money on future costs into the future. But then
thank you for tuning in. For more industry insights, follow us on all platforms at Loans Elevated.
And to get in touch with our team, call or text 801-713-4000 or visit loanselevated.com.